Hey everybody, today we're going to do a quick video on how to short the market. So we're going to go over a couple things here. One is going to be, what is a short? So a short is basically a agreement with you and the exchange where you're going to borrow some of their coins at a certain price. So imagine Ethereum was at 2,000 and you said, okay, give me some of your Ethereum at 2,000. I'm going to sell it at that price and then I'm going to buy it back lower and then I'm going to give you your Ethereum back. The difference that you make in between that trade is where you profit. So if you sell it all at 2,000 and then it comes down to 1,500, you just made $500 on that agreement. So for this example, we're going to use the isolated margin on KuCoin. So if you come over here to the right hand side where you'd normally put your order in, you're going to select isolated over cross. Cross margin means that your wallet balance is now shared across multiple coins. So if you want to buy or short more than just Ethereum, you can do that in the cross margin wallet. You'd have access to a bunch of different coins using the same leveraged amount that you've borrowed. If you go to isolated margin, you're only trading the coin that you've selected. Okay, so isolated margin for Ethereum means that you can only trade ETH USDT on isolated margin. So we're going to click that for now. Now I'm going to show you how to transfer your funds into an isolated margin account. So it's really simple. You go to the bottom here. It says borrow, repay, and transfer. Click on transfer. And I have $73 for this test amount. And we're going to we'll put $20 into the isolated margin. Type in 20, click confirm. There. Now you got $20 in your isolated margin account. So if you wanted to short the market, you could imagine that if this price came down to this level and then broke this level, you'd be in a short trade. Okay? So you enter your short here. This is where you would borrow the coins and you would sell them. And then once you've sold them, you're in a trade. It's the same as going in reverse, as if you were doing a long. You would be borrowing and then buying Ethereum and then hoping for it to go to the upside. For a short, you're going to borrow the Ethereum, you're going to sell it, and then you're going to buy it back when it gets down to these lower levels. Now to borrow, since we're doing a short, click on the borrow, and we're not borrowing Tether for this example, right? A short means that you're borrowing Ethereum. So click on Ethereum. And then these numbers at the bottom, 25%, 50%, 75%, and 100%, these are all leverage amount. So this is isolated margin 10x. 10x would be 100%. 7.5x, 75%. 50%, 5x. 25% is 2.5x. So for this example, we're going to use 25% or 2.5x. Now, if you try to borrow this much, I think it'll probably try to round you off to a second decimal place number. So if I click confirm, there it is, amount unit 0.01. So I have to take this 5 off. Okay, and then click confirm. Now I've borrowed some Ethereum. Okay, my liquidation price is 32,327. So that means that Ethereum would have to go up to $32,327 to get liquidated. So this is a pretty safe trade if you're only using a small amount. And we're not going to enter this trade yet. I'm just showing you the steps that you would take to get into this trade. So once Ethereum comes down to this level, if this level breaks and you get volume confirmation, then you would sell all the Ethereum you have. So let's look at the prices here. 1559, 1563. We're going to type in 1560. All right, and then click on 100%. Now I would be selling all of that Ethereum I have that I've borrowed at this price when it gets down there. So I'm not going to do it quite yet. Okay, now we're going to close the trade. Let's fast forward as if we had already taken profit on our short. So imagine Ethereum broke this level. It already came down to these levels and you bought back the Ethereum that you need to buy, right? So the opposite would be true if you were in a long trade. Okay, so you're going to long the position to the upside, and then you're going to sell when it hits a resistance. For a short, we're going to sell when it breaks support, and then we're going to buy it back when it gets to one of these levels, depending on which one you've chosen. Okay, so let's imagine that's all been completed. The trade has been finished. Now it's time to repay our debt. Okay, so you come back to the repay button, click on that, go over to Ethereum, and we're going to repay all of the Ethereum that we borrowed. Repayment amount here. Now, if you have extra Ethereum from this trade because you bought back lower, you get to keep those profits. So the profit that you make is the excess Ethereum after repaying your loan. So after I repay this loan, if I was in profit, I would have excess Ethereum as my profit for this trade. Since we haven't completed a full trade and we're just going through the motions, I'm just going to click confirm to repay the debt. So after you've closed your trade and you're ready to pay it back, come over to the repay section, click on Ethereum, click on the amount that you borrowed, and then click confirm. Now you've repaid your debt. Once your debt has been repaid, you can transfer your funds back to your trading account. So come over to the transfer button, make sure isolated margin is flipped around to this side, because you're trying to send your isolated margin balance back into your trading account. So after it says it from left to right, isolated margin to trading account, click on all or all available and confirm. Now we're going to take a look at the risk factors involved. Now what you want to do is you want to measure the amount of risk you can take in this trade. So this is a price range tool. It's over on the left hand side. Click on price range and that'll allow you to measure down or to the upside. For this trade, we're looking for a short Ethereum breaks this level. Okay, so if Ethereum breaks this level, we're looking to take profit at the next support or even the next support further down. So this would be your potential profit. If you're using a 2x leverage trade, for example, this turns into 26% profit. And the same thing works in reverse. That means that your stop loss isn't just 3.6%. Say you were looking to put your stop above this little section of price action, right? It's already broken this level, and you're hoping that the price doesn't come back up and interfere with this section and stop you out. This 3.6%, if you're using 2x leverage, that turns into 7.2% risk. Ideally, you want your take profit to be maybe 2 to 3 times more than what you can lose in that trade if the trade goes against you. Now we're going to look at the risk factors for liquidation. Now this applies to longs or shorts. Okay, so I'm just giving you a quick rundown of how much leverage you can use and what that equates to for your risk to liquidation. The risk to liquidation means that the price would have to move for a 1x trade, meaning that you're not using any leverage in a short, but if you're still shorting, so you don't have any of the coin that you're trying to trade. So if I have 0 Ethereum, but I have $1,000 and Ethereum's at $1,000, I can use that $1,000 as collateral to borrow a whole Ethereum, and that would be a 1x trade. All right, so I'm not borrowing anything extra. I'm giving up a 1-to-1 ratio of collateral. Okay, so 1x equals 100% risk to liquidation. What does that mean? That means that Ethereum would have to move 100% in the opposite direction of your trade to get liquidated. A 2x trade means you're allowed a 50% move in the opposite direction before liquidation. 3x is equal to 33%, 4x is up to 25%, and 5x allows you up to 20% of a move before risking liquidation. Okay, back to the Ethereum USDT chart on KuCoin. I'm going to show you how to set a stop loss if you're in a short trade. Now remember that you're not selling your coins back to exit your position. You have to buy them back to exit your position. So your stop loss is going to be on the green buy ETH side, right? So you click on stop limit. I wouldn't recommend stop market. These pretty much say that you're going to exit your position no matter what the price is as soon as your trigger is hit. This is okay if you're using high market cap coins, but if you're trading coins that have a fairly low market cap, this can be very dangerous, can actually be quite costly. So I wouldn't recommend it unless you're trading larger cap coins like Ethereum, Bitcoin, ADA, XRP, and so on. So if I was in Ethereum in a short right now, and I had to set a stop loss, say I entered a short on the break of this level at 1564, I might want to put my stop above 1600, for example. In this case, I would click on stop limit, and for stop, this is your trigger, right? So I'm going to put 16.20. And the price that it's actually going to execute the trade at, we'll put 16.40, maybe 16.50, and the amount of ETH that you own or that you have to replace. So for this example before, we used 0.02 ETH. So I'm going to type that in just for example's sake. Once you've got this set, this means that when the price goes back up to these levels, it's going to close your short out at 16.20 is the trigger, and then 16.50 is the ultimate amount that you're going to sell at. That's your limit for your sell. So if I was looking to exit this short trade with my stop limit, this means that if I put my trigger in at 16.20, it's going to fill my order between 16.20 and 16.50, whatever the best price is that they give me. 16.50 will be the maximum, right? It's your stop limit. So if the price happens to jump past this level without filling your order, you could just get your order skipped, but it's highly doubtful with Ethereum. It's a pretty large market cap. The liquidity is very good. Shouldn't be much of a problem for you. So if you have it set like this, this is how you would set your stop limit for a short trade.